Global Transformation Lead at Jones Lang LaSalle. And in today's session, the topic is enabling AI. And there is no tech without focus on outcome. So enabling AI in today's session is going to be about reclaiming hidden EBITDA. How can you use AI to actually figure out leakages, missed revenue opportunities, finding cost arbitrage, and actually delivering EBITDA? In other words, higher profitability and hence higher value for your shareholders. That's going to be the theme today. I'm Karthik Manimosi, Chief Growth Officer here at MindBridge. I've been in the industry for 2 decades, worked for such brands as SAP and Kyriba in the office of the CFO, and spent most of my career helping enterprises and fast growth companies fine-tune their go-to-market, fine-tune their performance. And I've had the rare privilege of spending a lot of time with C-suite executives over the last 12 months, 350 plus one-on-one meetings. And it has been very revealing, as I talk to the executives and try and understand their business and their aspirations in managing fear and grabbing opportunities. It's been a very rewarding journey for me as an executive as well. So today, we plan to have a 3-part presentation. We will talk about the evolving role of CFO. We will talk about the emerging tech trends and how you can, the challenges and opportunities that come with it, of course. And we'll introduce the concept of an AI-powered Central Insights Factory. And we'll bring all of this together through a conversation with a good friend and a very solid customer of ours, Jones Lang LaSalle, where Daniel Ruiz, who's the Global Head of Transformation, will talk through his journey in his partnership with MindBridge, of course, but mostly how he is leveraging artificial intelligence and the power of AI to manage business better and tie it into the theme of reclaiming hidden EBITDA. So introductions, I will be introducing Daniel formally in the presentation, but let's just jump right into our discussion topic today. Well, it is no surprise that CFOs today are the most trusted executives, both by the board and the CFOs. Their role is evolving. It certainly is. Yesteryears, it was all about risk and compliance, scorekeeping and performance, planning and budgeting. They moved on to become business co-pilots, helping in org design, org strategy, and go-to-market, packaging the different pieces. So their role has continued to evolve. And now, in today's world, they are seen as the enterprise value architect, expected to provide digital leadership, enterprise transformation, and certainly deliver an autonomous finance function by leveraging both hyperautomation and artificial intelligence. So the day and age of CFOs being true enterprise value architect has arrived. And the expectation on CFO is very, very high. So let's talk about what are the key factors and trends impacting a modern day CFO. For starters, the pressure to deliver high margin growth is at a 10-year high. And the way it manifests is 62% of CFOs this year have cut cost. And they are increasingly looking at areas like profitability. They've gone out to the shareholders and to the market and given guidances around how much savings is expected through the adoption of AI. The CFOs, 76% of them are today in charge of the data and analytics strategy. Think of the implications. The vast sprawl of data, the siloed systems, the processes in an enterprise now are the remit of CFO. They will have to look at this data and try to unify the vocabulary across the enterprise, getting individual teams to work as a single unit to deliver shareholder value and embrace the financial intelligence and the financial vocabulary. Artificial intelligence is mainstream. That's understood, certainly is. But there are subtleties to this discussion. There are 2 areas I would like to focus on. If we have to really deliver on the cost savings that I spoke about at the beginning, it's imperative that your projects are actually in production and are not gated, are not in incubation, they're not in a sandbox. Unfortunately, the numbers tell a different story. 20% of AI projects are actually in production, and only 6% of them are actually at scale deployment. You're not going to get major cost savings until your projects go live in production and are deployed at scale. So there is a disconnect between the mental aspect of it, where everyone agrees AI is mainstream, and in reality, we have not seen enough of these projects go live. It is accelerating, that's the good news, but it's nowhere near critical scale for you to deliver value for. The second problem area with the artificial intelligence is our ability to measure the success criteria, ROI, return on investment. 57% of AI projects are never measured for effectiveness, never measured for ROI. 29% of customers try to measure their projects and they fail. Only 14% of these projects are actually measured accurately. I'm not saying they're successful. I'm saying only 14% of these projects are actually measured for ROI. This has to change. This is a value conversation. And if we do not get enough of these projects into production, and if we are not measuring ROI, you will see experts question. This is a repeat of does IT matter? Someone remembers it in the early 2000s. It's a repeat of it. So today we'll talk about how do you take this technology and use it as a weapon, not a shield? How do you deploy this so you can not just get the value, but you can measure the value and tap into the profits and savings? We'll talk about it today and through different sessions all through the day. The CFO's role certainly is expanding beyond finance, ESG. There are several considerations that is not disputed, but I want to focus on the last topic. Finance teams. 20% of CFO's teams today are digital ready. Gartner says that number has to be 50% by 2027 to have meaningful progress with the AI projects. We cannot eliminate fear as a factor. There is certainly a level of cognitive dissonance between what the board and the CFO wants and the operational leadership level. Now we have to replace fear with adoption, with the concept of human-centric AI. The idea that when you apply AI properly, it enhances the productivity of your team and you're able to accomplish a lot more with a lot less. And that is going to be a critical factor as you're weighing through the importance of these projects, in my humble opinion. So Gartner did a survey to say, what exactly is the impact of all these different factors? And they have calculated that an average enterprise loses 3 to 8% of an EBITDA on average every year due to poor operational decision making. More importantly, poor financially informed operational decision making. So this is an opportunity for us to kind of build the operation on solid information and using the power of artificial intelligence. So let's just take a step back and figure out, where does AI work its magic the best and where does it not work the best? So one of the common problems that I'm finding in my conversation is a repeat of the .com era and then the move on to the mobility. So we had those e-commerce websites that had a very nice user experience on the web, on the internet, and suddenly mobility showed up and you really had to create an experience. Trying to replicate what works on a website on a mobile phone does not work really well. So you really had to build a native experience on a mobile phone. And artificial intelligence is something very similar. If you really have to embrace artificial intelligence and build a thoroughbred enterprise and a world-class operation, you have to reimagine the architecture of your processes, how your people are addressing the problems, and so on and so forth. So again, I'm leaning on Gartner here again. We do a lot of work with Gartner, by the way. I've done over 33 plus analyst briefings in the last 12 months. And we do share a lot of anecdotes and findings, and Gartner validates it with a lot of survey on the ground. This is another great survey where they said, okay, let's imagine, on the x-axis, you go from low to high complexity of problems, things that require, root cause analysis, diagnostic capabilities. As you go from here, low to high, the complexity increases. And on the y-axis, we talk about how does it impact the business, the materiality to the business, as you go again from low to high. So here is some of the common areas how AI are being deployed. Automated invoicing. It's a good example of a simple automation, step up from RPA world, classic automation, and people are showing a lot of interest in deploying these automation components. This is considered a low to medium complexity problem with a low impact and materiality to the business. It's just an extension of automation. So you're not going to get earth-shattering savings from AI just by automating things just one step further. Then comes things like expense forecasting, cash forecasting, demand forecasting, and production forecasting. So different types of analytics that you can apply. So this is again considered medium complexity with medium impact to the business. And then comes anomaly, risk, and fraud detection. And everybody agrees this is a very complex thing to do within the business. However, the materiality without context is very, very low. So where is the best bet? Oh, by the way, the size of the ball indicates the willingness to spend on this project in near term. Okay, so there is actually a clear winner for AI and consensus on where it produces the most impact. Profit variability. What does it mean? It means that you're looking at some of the most impactful problems within your business. You're finding the biggest source of variances to your profitability. You're understanding the key drivers leading to it, and then you attack it using artificial intelligence and you justify the investments. So this is a good screen for you to look at it and start to kind of channel in your mind, where are your AI projects? Clearly, a profit variability allows you to tap in those hidden EBITDA, and we'll talk about it in a bit. So transitioning on, so why can't we do the same with our traditional tech stacks? Simple reason. If you look at the old school data warehousing, business analytics, it is very painful to build the warehouse, load the data, and then build dashboards on top of it, and then train your team on it. All of this takes a lot of time, tens of millions of dollars, a lot of time, resources, and it also still lacks the context. These are not finance dashboards built by finance people for finance teams, and the problem with that is it lacks context. So you're lost, a couple of years trying to build all these things, and yet it does not give you the real impact you need to run an effective business. And then we have, the supervised artificial intelligence, certainly a step up. The problem with supervised AI is that you still need to build a warehouse, you still need to load the data, and then you have to train the data. All of this costs you a lot of money on infrastructure, and training the data can cause some problems. For example, you're only transferring your biases. You're only looking for known errors. And when you are transferring your biases, if you were making mistakes, you're now guaranteed to make them more consistently and at scale because you're automating it, right? That's some of the drawbacks, and things tend to break. It is not evolving, so on and so forth. So, and when people hear artificial intelligence, you immediately think of technologies like ChatGPT, Claude, or Grok, for example. And the problem with that is that they are good for certain type of problems. The generative AI, they do produce productivity boost, and you'll hear Daniel speak about it a little bit later. In areas where you have insufficient data, they are very, very effective, but they do come with their own set of problems. For starters, there are IP issues. They do hallucinate. They lack context in many cases. They have higher instances of false positives, false negatives. So all of these are contributing to those new analysis coming in to say that 95% of AI projects are not delivering value. The question is, have you chosen the right vehicle for the journey, right? And to save all of us, we have a wonderful technological innovation called unsupervised machine learning that sits at the center of all of this. The unsupervised machine learning learns and evolves. It does not have the same drawbacks with supervised machine learning. For starters, it is very effective in high data volume areas, both structured and unstructured. And two, you don't really have to build your warehouse, load the data, train the data, so on and so forth. And you can actually go very quickly from handshake to insights in 6 weeks or less, allowing you to tap into the EBITDA component that I keep talking about. So how is this all possible? Because in your enterprise, like in many other enterprises, majority of your problems are beneath the surface, like an iceberg. And unsupervised machine learning works from bottoms up. It works through every transaction of yours, looks at connected data, finds a relationship, and it's actually able to build relationships. So not only is it very good for checking known errors like incorrect payments, duplicates, manual journal entries, fraud, it can also tell you things you did not know about your business, because these LLMs work bottoms up, and this category is called unknown. It learns, it evolves, it adapts, and it gives you that advantage of speed, particularly when you are trying to go back to the market and justify your AI investments. It allows you to measure ROI, and I'll talk about it more in a little bit. Okay, here's a simple test. And I did that in Financial Executives International Conference. Over 250 operational leaders were assembled. And I said, this is called the banana test. So it's fairly simple. You got two coordinates, X and Y, and they're all pairs of data. And you have rows named alphabet A through alphabet I. So they're all pairs. And we asked them, looking at these data sets from A through I, tell me which row is anomalous. And I'm sure many of you watching the screen right now are doing that math in your head. Keep your answers to yourself. Here's what happened when I shared this with the 200 plus participants. Many of them thought it's row A. Actually, the answer is row C, and here's why. When you start to plot the coordinates on a graph, the one point that stays outside is the outlier, and that is the row C. And then the important question to ask ourselves is, majority of your financial processes relies on purely just human judgment with your eyes. If it's hard to spot an anomaly with 9 rows, imagine looking at a financial statement with tens of millions of rows. So this is why technology is a real blessing. Okay, so putting this all together, this is not the only way to do it, but this is our way of doing it here at MindBridge. So we have taken that power of unsupervised machine learning and we have packaged it. And to that, we have around 17 algorithms plus that we are building. And then on top of it, we have added traditional business rules and statistical models. So through this combination, we are now able to do any form of analysis. So many of you have been with us in this journey for a long time, but for those of you who are joining us for the first time, we started over 9 years ago, and one of our major customers who made this company is KPMG. So we run the audit, AI auditor, Clara, as part of their stack. And then we developed our audit control capabilities, and today we serve 5 out of 10 major A&A firms. We have several marquee brands who rely on our platform to run their audits, okay? And then something happened very organically. As these auditors were presenting findings to the board of directors and the CFOs, the findings were granular and they were actionable. And there were things that the enterprises had missed in their analysis. And nobody likes it when the auditors know more about their business than you do. So the recommendations were, why don't you use the same platform to close your books? That's how we went into the world of internal audit. As the internal auditors were using our platform to close the books, they figured out that they have a limited budget and they are fighting waves on a beach all day. There's so many things to look at. So they made a decision to take a portion of this budget and take it inside the organization, start attacking the problem at their source, which is outdated controls, outdated risk frameworks, siloed systems with data that is exploding, incoherent processes and people, lack of communication. So that's how we got into line of defense too. And from there, we went into the CFO's office because the CFO was like, okay, these are good granular insights. Why is it that I always get to know this after the fact? How can I get on top of it? So that is how we went into the enterprise. So we'll talk a little bit more about how we bring these pieces together. But closing out on the topic of technology and what to expect, here's a great chart, right? Many of you have put a variety of AI projects into production, and the chatbots, the co-pilots, the Gen AI pieces. The key question to ask ourselves is, does the technology and its capabilities match the promise of delivery? That's a critical piece. So here is a 5-point scale, I would say, across various different components. For example, if you start to rate the technologies from static to adaptive, reactive to proactive, from doing simple tasks to setting and executing complex goals, going from simple, homogeneous environments to complex heterogeneous environments, and from being guided to autonomous. So let's kind of stack rank 3 major waves of technology in AI. Let's talk about first the chatbots. So if static is scale 1 and adaptive is scale 5, you can see along these metrics where does chatbots fall. Copilots are only marginally better. Where you're really going to get transformative results is when you adopt agentic AI. Okay, so as you're thinking through the AI and the impact, promise versus delivered, ask yourself those granular questions, like where are you placing your bets? Are you focusing on unsupervised machine learning and the ensemble AI, or are you still looking at generative AI as the answer? These things are very, very critical, particularly in data-rich environments like finance. These can actually make a very, very big impact. Okay, so now accelerating. Let's put all the pieces together. What makes for supercharging your enterprise performance? Unify the data. So you'll have to connect the data from your general ledger, subledgers, financial systems, non-financial systems, structured data, unstructured data. You need to pull them all together, clean them, ensure data integrity. So this is where we can connect as MindBridge to different systems using APIs and bridges, but we also rely on partners like Databricks and Snowflake, Fabrics and others as well. Okay, once data integrity is established, you point the power of the ensemble AI on the data, and then you create financial integrity. How do you do that? By creating a connected view. Remember, there is a reason why your ERPs and your system of records are not very effective trying to look at processes, because your processes exceed systems. So long as the data is contained within the system, they're going to be very good, but that assumes that the data feeding into the system is clean. It seldom is. Okay? So if your process exceeds systems, you need a connected view of the enterprise. And we'll talk about how we are accomplishing that here at MindBridge. Okay, you've done the analysis. Now you have your results. That's exactly what it is. It's you have results that could sit on a piece of paper, or on a dashboard, or on a report, and it could be a look back 6 months from now. But the real impact in capturing EBITDA happens when you take that information and try to act on it by integrating that into workflow and bringing your workforce into the picture. Every problem has an act by time stamp on it. So as soon as you find the problem, you have to ensure that we are moving very quickly and acting on it in time. For example, closing books happens in month end, so you probably need a cadence, weekly or bi-weekly, to get to it. Running payroll happens bi-weekly, so you probably need a weekly cadence to get to it. Payments happens daily, right? And Matthias, our CFO, jokingly says, in the world of CFO, end of day is real time. So it depends on what problem you're trying to solve. And finally, you put all these pieces together, you get meaningful change management, which I'm all about. Okay, so bringing all these pieces together. So how do we do it in MindBridge, and what is this concept of an AI-powered Central Insights Factory? I spoke to you about the organic evolution of MindBridge from being an audit control to a finance control, and becoming the trusted partner for CFOs and finance leaders to run a world-class operation, right? And the key to that was kind of taking some of the learnings that we have, like the audit world was, the journey still is very, very rewarding. We rely heavily on our audit partners. So we have put over 120 million in R&D to build our platform, to build our LLMs. We have a 150-person team. Majority of them are data scientists and experts in financial processes and audit processes and financial control, so on and so forth. And we have analyzed close to 270 billion, last week calculated, entries. And that number has doubled in the last 12 months. So based on the strengths, we have actually developed over 8,000 audit quality checks built into the platform, 250 to 300 plus controls available off the shelf. So it's very easy for me to build an AI use case library, which covers different aspects of the financial process. Now, I'm going to walk you through a tour of the factory, if you like, how we got there. So this is where we normally find every company is unique in its own way. The way you connect with your customers, the way you package your software, your competition is unique, your value prop is unique. However, at the core, the financial processes are far more common. And thanks to folks like SAP and Oracle and others who worked over years and decades to install best practices. So it's actually possible to look at your financial processes and work towards an outcome, which is top line, bottom line, cash flow, liquidity, so on and so forth. Okay, so your processes go from order to cash, record to report, procure to pay, people, and assets, say for example. So in today's world, there is a lot of silos in your enterprise. This is no surprise. You face this all the time. You're hiring smart people to run tomorrow's business, and they're sitting there stuck in yesterday's world. That's the reality. Your data is exploding every year, doubling. You have a semantics nightmare across your multiple instances. You have over 330 to 340 SaaS applications on average, and hundreds and thousands of small decentralized monitoring tools. The way it manifests is real siloed execution. You have your 3 lines of defenses. They're all optimizing functional expertise, functional excellence. Your job as a CFO, a finance leader, is to drive organization-wide financial excellence. You're trying to unify the vocabulary. You're trying to blur the line of defenses. Okay? So the problems you're trying to solve certainly, is getting better collaboration, better communication across your teams, working towards a common goal, and so on and so forth. Okay? So if you look at it, let's take one process, for example, here, procure to pay. So classic, financial process starts with requisition, purchase order, receipt, invoice, payment, and credit. Okay? At MindBridge, we start by giving you the first cut of information by analyzing these ledgers and subledgers. For example, looking at requisition, we can talk to you about approval issues and pricing issues. We can look at your invoices and talk about duplicates, or we can look at payments and look at inaccurate currency and exchange rates, for example. But that isn't enough. You're going to get fresher, better insights if you combine the view. For example, if you combine your requisition and purchase order, you get a view of procurement, or you could choose to do a 3-way match, or you could just do an accounts payable by comparing your invoice and payment data, or you could just do dispute resolution. Now, once you go into this world, you're getting fresh set of insights. By looking at the procurement component, you're looking at identification of invalid terms, or you're looking at over and under invoicing. You're looking at payment delays, for example, or best inaccurate tax calculations. So we're doing a recent analysis with a major customer, and we looked at use tax for one of their states, and we found millions of dollars overpayment, underpayment, and now they're using our platform to reconcile the tax area and data. In another case, with another customer in the manufacturing space, they used our platform to run a period analysis, and for that particular period, we found that the gap between their invoiced and shipped was 13 million, and they have 139 million stuck in delayed invoicing. Things that matter when you get to it in time. Rather than that looking like a source statistics on a dashboard months later, you can actually act on it and tap into top line, into bottom line, and get better cash flow outcomes. Okay, so moving on. So this is the genesis of our use case library. We started to combine these views, and we said accounts payable is one of the use cases. Procurement is another use case. So we have pre-packaged all aspects of it. You saw me speak about the supercharging the enterprise, data integrity, financial integrity, workflow integration, workforce integration, all leading to meaningful change management. So these are readily available off the shelf for us. So in fact, we have close to 14, and right now the number is 15. We just added tax and tariffs to this one of our most popular use cases. So the way our use case library is structured is top line, bottom line focused, order to cash, record to report, procure to pay, people, and assets. Okay, you recognize this flow. On the order to cash, we have things like accounts payable, margin analysis, gross to net, very popular. Record to report, we're talking about continuous auditing as a use case. financial close, financial reporting, manual journal entries, P2P, business process transformation, AP audits, payables, inventory, and joint venture billing, people, expense management, payroll, and then asset capitalization, okay? And the way we work through this is we are looking at, for each of these use cases, pre-packaged set of risks, control gaps, and inefficiencies. Think of your approach to solving this problem in your enterprise. Every time you find a problem, you create a control, you deploy the control, you maintain the control. The one thing you forget to do many times from my conversation is you never retire a control. So it is not uncommon for a massive operation to have over 2,000 controls, of which only 5 to 7% are actually automated. And the remaining are either manual or IT assisted. So there is an arbitrage for you to create productivity, to retire some of the decentralized tools by moving from monitoring to continuous auditing using our platform. Okay? And to make things easy, we also have a set of deliverables for each of these use cases. We call it the taxonomy. For example, you can start with accounts payable, and we get you a set of insights packaged, ready to go. In this case, duplicate vendor payments, or maverick spending, or invoice discrepancies, or unused vendor discounts. For a mid-sized company, which is below the 500 million revenue mark, they used our platform to do an analysis, and we found that for the last 12 months, they had missed out on $565,000 on discounts. I literally heard the CFO say in the room, "Whoa, I already told you, if you're going to get discounts, I don't want to sit on cash." The problem is it took them 2 years to create a process and to attack it, and they're still only 65% effective. We got there in 58 seconds. We looked at 2.4 million entries, and we said, here are the most problematic entries, and they add up to 565,000. Oh, by the way, we only looked at the invoice. If we look at the discount terms, we can even find more. So this is the power. This is how you unlock hidden EBITDA in your business and run a world-class operation, transforming your cost center into a profit center. Okay? Now, how does these programs fit in? Well, you can plug in our programs into different existing transformation programs you may be running. SOX transformation, great example. For a major oil and gas company, we're now working through a GL health check and then leading to both manual journal entry control view and SOX clearance. And they have over 2,500 controls, of which only 6% are automated. And they're working with us to optimize and create continuous auditing from secondary to primary control. Okay, you'll hear Daniel talk about business process transformation today, so I will not steal his thunder, but essentially he's going to talk about how you can apply this to areas like AP, travel expenses, payroll, so on and so forth. Okay, so this fits neatly into your playbook. Now, let's talk about ROI. Everything and anything you do has to be measured, and impact has to be delivered. This is very, very important. So when you are working with MindBridge, we're going to create a way to measure the impact of our projects. So the impact comes in first, assurance. You heard yesterday from PCOB, from Jeffrey Moore, from Stephen, the point about trust, it's being disrupted. Is it enough that you get an external auditor opinion once a year, 4 times a year? Probably you need to be rendering trust on a daily basis at the system level, at the process level. So using artificial intelligence would be a very good way to work with your external auditors and to set up these operations more effectively. 100% of the data, 100% of the time, and rendering trust on a continuous basis through continuous auditing. It's not just a sleep insurance for you. You are actually going to run a very effective operation. It goes to your valuation. You can take better decisions, you can be more comfortable in the quality of the data. More importantly, if you look at the go-to-market process today for you in your operations, there are 3 parts to it: analysis, pointed investigations, and executive decisions. By setting up trust to be rendered continuously and by leveraging the power of artificial intelligence, you're going to reduce drastically the time you spend with analysis, move more quickly towards pointed investigations, and more importantly, you're going to be making more meaningful executive decisions, which matters to capture those profit variability components. Operational uplift, I spoke about it. leakages, missed revenue opportunities, missed discounts, okay? And then the value enablement framework. Think of it as 3 ways this framework can work. New value creation, existing value capture, preventing value destruction. I'm going to talk through each one of them. Let's talk about new value creation. That's precisely what the unknown unknown does. I've given you some good examples here. Another example is another major oil and gas company, and they use our platform to look at their AP data. And they found, on a lazy Sunday afternoon, I call it, they found that one of their suppliers had coded the billing rate in thousands, while the approved billing rate was in hundreds. Connected view of the enterprise. And 8 invoices worth 2.8 million were flagged on the platform. That's an unknown unknown, because you're not just doing pattern matching, you're just looking at comparing the data on the invoice to the contract terms, and now you're getting a new view. And this will cut across. You'll hear Daniel speak about it. It's not just about structured data in the system. It's about comparing it to unstructured data as well, which is exploding in your world, okay? Your chats, your Slacks, your faxes, they still come in. And you have to figure out this connected view, okay? So unknown unknown is new value creation. Known error detection is value capture, your duplicates, your errors, and fraud. And here's an interesting statistic, right? Fraud is less prevalent than manual errors. I'm sure it's not surprising to you at all. The instance of manual error is 1 to 2%, which means that if you are filling in 100 boxes, you're likely to make 1 or 2 mistakes. Fraud, on the other hand, happens 0.05%. One of them gets more attention than the other. Both are equally bad for your business. Okay, so who is doing the spell check for the numbers? Like Grammarly does it for the words. So this is a real opportunity for you to tap into the known unknown error detection. Last part, value destruction. If imagine you are a fast-growing mid-sized company and you're about to be bought out because the private equity is moving around. Great time for private credit, private equity. They're coming in, or a parent company wants to buy you because they consider you a part of their value chain. Can they trust your numbers? If they cannot, there is destruction there. It sure doesn't win you many deals, but it can lose you one, right? It's at different levels. Fraud or risk for a large company erodes shareholder trust. So value destruction is an important aspect. There is another kind of value destruction, which is your team now has to learn a new way of doing things. That's why ROI is important, because you want to make sure that the benefits far outweigh the change management and the pain that's involved. So you're not going to do this for a break even or a 1x, 2x. You will do it for a 5x or 7x or even 10x. So if you don't measure your ROI, it's very hard to justify your investments. Okay, now, how do we get on this journey? I call it the crawl, walk, run. So you need to go through that use case library that we saw and jog your memory back to your last board meeting, your last steering committee meeting. Think through what was discussed. There are a lot of problems where you have sub-optimized solution. You are spending a lot of money because there is no other way outside of it. So I asked my customers and my CFOs and my leaders, what was discussed most? Was it your revenue? Was it your margin? Was it gross to net? Was it your taxes? Or was it your suppliers, payments? What was it? And then we handpicked 2 or 3 of the most impactful use cases. Tax and tariff dominates a lot of my conversations right now. Indirect taxes, use tax, sales tax, tariffs, excise duties. People are always worried about coding invoices correctly. It's not just about overpaying your taxes. Underpaying can lead to brand damage and fines, and you could be in the eyes of regulators and law enforcement. So that's not a good thing as well. So we essentially figure out your high priority use cases. Then we go through a process of standardization, optimization, and innovation, and we are creating value in the process. It's not just soft savings. It's about finding new things. It's about ensuring 100% assurance for your business. And all of this leads to the crawl, walk, run. And effectively, as you start to gain control, what you're getting is the Central Insights Factory. Think of Central Insights Factory as a owner's or a CFO's cockpit. You know the architecture of your enterprise and your company better than anybody else. Remember, I started the presentation talking about CFOs being the true enterprise value architects. Now you have a tool which is supercharged by cutting edge technology a technology that can unlock your previous investments. And now you have a way to continuously scan your enterprise, like an MRI scan. And you're going to find problems and you're going to ruthlessly attack it across different processes. Order to cash, procure to pay, people, record to report, assets. Your focus is going to be maniacal and myopic on delivering ROI. And you have the brain at the middle, the AI-powered brain at the middle. So the Centralized Insights Factory is an effective way of building it. And it does not need an army to do it. You'll hear Daniel speak about how he has implemented this architecture, or at least he's on a journey to implementing it within JLL. And the key part of this is establishing the data quality, data integrity, moving then to the power of LLMs and the financial integrity. And then on that foundation, that pristine sheet of glass that sits atop your complexity, you're now starting to build a world-class operation by tuning your process, tuning your controls, both for efficiency and for effectiveness. Okay? And all this leads to the ultimate state of a CFO's AI-powered Central Insights Factory. You have the brain in the middle, all of your key processes mapped, all of your people mapped, all of your systems mapped, and you're continuously scanning for known error detection, value capture, continuous auditing, assurance, and new value creation, unknown unknowns. So with that, it's my absolute pleasure and privilege to bring on a close friend and a important leader in the world of AI and finance, Daniel Ruiz from Jones Lang LaSalle.
Perfect, thank you. As Carly said, I'm Daniel Ruiz. I'm the Global Finance Process Lead at Jones Lang LaSalle, or JLL, as you can see on the screen here. If you're not familiar with JLL, we're a global real estate services company. We operate in 80 plus countries, and like many multinationals, we've got a pretty complex operating model. We've got a varied product line and service line. So we've got leasing, capital markets, property management, facilities management. We do some tech development internally as well for purposes of property management and so on. So a lot of different types of business models that leads to a lot of different types of financial data and insights that we have to generate. I'd add that we've historically been run pretty regionally as well. We're now on a global operating model, but we have a legacy of regional processes. And again, that adds to inconsistency in data and consistency in process. Now, my role, Global Finance Process Lead, within that, there's three underlying processes that I own. I own Procure to Pay, I own Order to Cash, and I own Record to Report. And we've started with MindBridge, and I'll get to this a bit more in a few minutes, but we started with MindBridge mostly on the Procure to Pay side. Now, like many other companies, JLL is investigating how do we want to use AI. We all go to conferences, we all read insights, industry insights, and AI, and now Gen AI, and then agentic AI is the new phrase. Like you see a lot of these things popping up, but how do they fit into our process architecture or our overall strategy? Now we have a strong leadership push from our CFO and from overall FLT to drive innovation. And part of that innovation is, do we build or do we buy? And we're testing a variety of, on both sides of the equation there, but build and buy. And we've started using AI in particular to generate insights in areas where we don't have a lot of data, and areas where we have maybe too much data, or we don't know how to interrogate it. MindBridge, in this case, fits on we've got a ton of ERP data, we've got a ton of data in the systems. How do we make sense of it? Karthik talked about being able to sample all your transactions. If you look at most of our areas where we are sampling, we're doing 10%, 5%. Even when we're doing bigger numbers, we're not approaching 100% sampling. With MindBridge, we're able to look at 100% of that information. But we also have areas where we have too little data. And we're using things like a third-party tool to help us understand our processes better. That kind of dovetails well with some of the findings from MindBridge, because if we find incidents where we're surprised by our results, how do a duplicate payment like this slip through? Understanding our underlying processes for that particular variant that allowed it to happen is quite important. So we're using Gen AI to sort of dovetail with what I would call traditional AI in those areas. We're also using it to extract information where we don't have enough information. And again, I think that complements well with MindBridge. So if you think about right now in our expense systems, we don't have a sales tax delineation for many of our countries when they submit expenses. So how do we know that the sales tax was charged properly, particularly for some of our bigger expenses? We don't necessarily have payment terms coming in our system in a consistent way, or we're not capturing early payment discounts within our vendor setup process. So how can we use GenAI to extract more information and then feed that through MindBridge? That's sort of how we're continuing to evolve that conversation. So what I would say is MindBridge and GenAI aren't mutually exclusive. They're complementary in how we're thinking about our overall implementation of AI. So I already mentioned that we have a high volume of transactions. We actually have multiple ERPs, and part of that is by design, part of that is legacy. The legacy part is just as different parts of our business. Maybe we bought a company, brought them in, they used a different ERP. We still have some of that legacy, but some of it's designed to, because we manage financials on behalf of our corporate clients as well. And so we keep those in a separate ERP. And that leads to a lot of complexity and managing a huge volume of transactions. So how do we, again, go from 5-10% sampling to analyzing that whole pool? And clearly the solution is, in the case, MindBridge, right? How do we get to some of those known control points? We have started our journey focusing on some of those known control points. So things that Karthik mentioned already, like duplicate payments, potentially fraudulent transactions, et cetera. Things that we've got controls in our ERP that already help us identify these things, and we consider those controls to be solid. However, MindBridge has proven to be able to show us instances where there might be small holes in those controls, and therefore we can identify things. People editing invoice numbers, for example, to be able to not flag it as a duplicate. Things like the header amount not matching the line amount on a voucher, not flagging as a duplicate, but MindBridge catching it as a duplicate. These are real scenarios where we've been able to identify, like I said, small holes in our controls and think about how we not only fix the symptom, like go back and collect that duplicate payment back, right? Get a credit note for that, or understand why people are putting expenses in the system in a certain way, but also fix the underlying process so we can avoid those instances in the future. Now, some challenges. And I've already kind of alluded to the fact that data is a challenge. If we're not capturing information in our systems, how do we actually get the insights from it? If we're not capturing early payment discounts, as one example, how do we get that info? Well, we know that's a gap, and now we're looking at GenAI to maybe capture some of that, and again feed that into MindBridge that can run through the brain behind it to identify where we're not optimizing some of those things. We also know we're making other changes directly in our ERPs to capture things in a more consistent way. So it's also part of this journey has been identifying where we want to make changes in our data capture so we can actually go forward and analyze our performance more consistently going forward. Other thing I would say from a challenge perspective is how do we prioritize the findings? Some of you, I assume, are already customers. Some of you are considering the journey. And when you first start, it can be like there's a lot of findings. And how do you normalize that? How do you think about what you want to change and what you don't want to do? How do you eliminate the false positives? Is there design issues that you want to change in your data configuration? What we started with was a sort of a SWAT team. It's a few members of a team who go in. We partner with the MindBridge folks to understand the rules, to understand the data, to make tweaks. We've had a few instances where we submitted something where there was a flaw in our data, so let's tweak that and let's fix it. But it's a partnership where it's the small team who can be quite nimble and agile to identify the issues that we see, the sort of the issues in the process, but also the issues in like the real findings and observations, and determine how we want to change that. Go collect those funds, go fix those controls, work with the teams who allowed it to happen to understand what happened, and sort of do the knowledge side of things. So we've started small, and I think that's really been helpful. We're able to learn that way. We're able to get findings in real time still, but we're able to learn, and we're able to be quite agile in how we go about things and prioritize the biggest efforts. We didn't have to go under the huge change management exercise to bring hundreds of people, up to speed on how to use the system, what the system's telling us, assign them specific activities. It's we can get on small workshops, look at the findings, and again, still deliver real results. Now, to date, we focused a lot on duplicate payments from the AP side and some anomalies in our T&E data. So, for example, how people are submitting cash expenses and what that expense data is telling us. And I've already said this, but the tool has helped us find a decent number of duplicate payments, more than I expected, to be honest, because I do feel confident in our controls. But because of the volume of payments that we have, we are seeing, a decent number of duplicate payments. And we've actually only started with one of our geographies. It's our biggest, it's the US, and only one of our ERPs. We have an opportunity to scale this much more. So I think we're off to a great start where we are identifying duplicate payments and other anomalies in our AP. But again, duplicates has been sort of the main focus. And on T&E side, it's a similar story. We found some things that we weren't necessarily expecting. We knew that we might be looking for some of them, but we were maybe surprised in some of the results. And we're continuing to learn, address the symptom, but continuing to learn how we strengthen our controls over time. And what I love about these use cases that we picked is every finding we have drives tangible savings. It's a duplicate payment we recover. It's expenses that we don't reimburse. It's cut back on funding for a project. These are dollars that we're saving that allow us to be able to maybe fund some of those projects that we couldn't have otherwise funded. And I think we're still really only scratching the surface of what we can do. We've had sort of a hyper focus on a couple of things, but as we expand our scale, I'm really excited about all the additional opportunities that we have as we start bringing in more data by combining Gen AI into the solution. We're going to have, a wealth of new opportunities that we can even look at to understand potential leakage. So as we go forward, I think the future focus for us is looking for other hidden patterns, really focusing more on some of those unknown unknowns, thinking about how we embed more of this. So we're looking at the control gaps that we have today, but how can we embed some of the risk scoring from MindBridge into our BAU? So today we might do T&E audits based on dollar value or the expense type that was used, but can we actually get smarter about how we audit by looking at the risk scoring from MindBridge and embedding that into our workflows to drive different transactions to our teams? The same would go for the AP side as well, of course. And I mentioned already expanding this to cover other ERPs. So I think in summary, we're really, really excited about the progress that we've already made, still scratching the surface of what we can do. And I'm really excited for the journey ahead of us.
Daniel, thank you for showing us a glimpse into your thought process and how you're designing this at JLL. Maybe we have a couple of questions to come your way if you don't mind answering. The first one is, what is JLL's innovation strategy as it relates to finance, and what part does AI play in it in your mind?
Yeah, so we have this mandate to innovate, and there's different KPIs that we're measuring, right? So hours saved is a big one. New use cases that we're delivering is a big one. Overall, user experience, those types of things all factor in our innovation strategy. But we don't have a set, you must go deliver 3 AI use cases. But I think naturally, when people think of innovation, a lot of people start at AI. What I've found internally is that people like the idea of AI and they want to be able to use it, but they struggle a bit at okay, well, I know I want to use AI, but what's the best way to use it? And where we found success is showing people the path of, hey, here's a real example of how we can use AI to drive change, and how it not just is novel in concept, but it actually can embed into some of our workflows, and people can see how it becomes practical and to use. And I think a lot of people also fear resistance to change. But what I found is when you show people, because there's a lot of natural curiosity around AI and use cases, when you show people how to make that tangible and real, those people that have that desire step forward and want to help drive change. So I think we've sort of been pushing on an open door with many folks because we've shown them the way, and it is a big part of what we're doing today overall in our innovation plans.
Excellent. Thank you, Daniel. Can you tell us how you chose the use cases that you did? Like, what was the criteria behind it with MindBridge?
Yeah, so AP and T&E, there's a lot to be, there's a slide that you presented with like the size of the balls on the page and everything else. And anomaly detection and risk detection, I think leaders value some of those things, but they value them most when you don't have them, right? If you're getting fines, if you're getting other issues coming through, major audit findings, et cetera. So a lot of pressure. It's sort of like it isn't a problem until it is. But with these use cases, we can not only fix potential controls and address risk, but we can get very tangible value from saying, oh, hey, this is a duplicate payment or an overpayment, or we're not identifying some of these potential discounts. It's a very easy leap from finding to dollar. And so we started there because it was an easy way to sell it as there's real value here. Let's prove it. And then let's think about how we expand.
Yeah, that's very helpful. One final question, if I can just squeeze that in. What are the results of your execution to date?
So we've had a decent number of findings, right? Like I said, some of them are a surprise. I think the volume of the duplicate payments was a good and bad thing, right? Like it's bittersweet because it proves that we needed to do something, but it also means we got a few things to fix. And I don't want to set an alarm bells or anything. Like it's not like an overwhelming volume, but it is a helpful volume to show that we can improve our controls. On the T&E side, there are a few things that maybe you could have suspected before, but you're seeing them come through. So I think it's been an enlightening experience so far. I'm really happy with the value that we've been getting because we're getting real tangible findings, we're real tangible changes that we can make. So I think overall it's been a great start to our journey.
Excellent, Daniel. I know there were a few other questions and we will try to address them to the audience. So I'll take this moment to thank Daniel for his time and his wisdom. And hopefully we all learn something about scaling AI with the new enterprise. Thank you very much. Appreciate it.
Thank you very much, Karthik and Danielle. And thank you to all those who submitted questions. If we did not address your question during this session, our team will follow up with an email. And now I'd like to pass it back to the FEI staff.
This marks the end of our webinar. Thank you for joining us today. We look forward to you joining us on future webinars. You can find information about upcoming webinars in the resource window. Don't forget to download your CPE certificate in the certification window. Your CPE certificate will also be available to download in the thank you for attending email that will be sent within the next 24 hours. If you have any questions regarding CPE credits, please feel free to email us at events@financialexecutives.org. Have a wonderful day, and thank you to MindBridge for today's webinar.